What do you think the rate path looks like here? And is that going to alleviate some of this pressure that we're talking about on households and maybe bring a little bit of optimism back to the housing market?
Well, we just changed our view on that this month because of the removal of counter tariffs by Canada largely. We had thought the bank would have held. They're at 275 today, the policy rate, which is smack in the neutral range that the Bank of Canada has. And actually, our estimate is 275 as well. So they're already neutral. They're ahead of where the Fed is. The Fed is still in restrictive territory. Bank of Canada's already cut. We thought they had a pickle in their hands because they had the trade war could lead to higher prices from the tariffs and also a weaker economy. Now that the Canada has basically eliminated almost all of its retaliatory tariffs, especially if you don't forget, there's also a remission program for our tariffs. You tack that on top of that, the removal of most tariffs, about $45 billion worth, the only ones left are steel, aluminum, and the outlook for inflation is much less of a risk of higher inflation. In that environment, where we don't think inflation will rise as much because of that removal of tariffs and the uncertainty is lessened, we now expect the bank to cut. We expect them to cut a quarter point next week and another quarter point in October. And now whether they happen in these two meetings or not, I think we're looking for a half a point cut.